Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday morning edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. And, some Mondays are light on news, and this is not one of those days. So between Tesla and Facebook and GE and a ton of ratings, we'll have a lot to get to on our show. Our guest today, who joined us at 8:35, his name is David Miller. He is a senior portfolio manager and CIO at Catalyst Funds. So we'll get right into it before I read this quick ad about the Benzinga FinTech Summit coming up in San Francisco, November 14th. Top people from TD Ameritrade, Schwab, E-Trade, Ripple, Cabbage, the co-founder of Venmo will all be there. If you go to bzsummit.com and enter the promo code PMP, that's PMP as in pre-market prep, PMP at bzsummit.com, you will get half off, or the first 10 people to do that will get half off their ticket there. Joel, what's the word in the overnight session?
Higher, much higher, trading higher by 16.75 points at 29.35.75. We've already touched last week's high at 36 even. Trading that right there, right now, that's my number of the day on the upside. Bitcoin futures trading down $75 at 65.65. Crude making a new high of the move. The former high of the move for crude was 73. Well, not quite. 73.73 in September. First day of October, 73.65. Maybe keep an eye on the $74 level. Nice round number. Gold down 5.10 at 13.91.10. Silver in the red as well by 12 cents at 14.59. And after the big deal with Canada, maple syrup futures are trading limit down.
Limit down? Wouldn't we be limit up?
No, because you guys are going to flood us with all that maple syrup. So the maples, they may not reopen.
One of our major exports, maple syrup and lumber. We got a lot of beavers in Canada. We take down a lot of lumber.
So what are you looking at? I mean, your head must be
it's so much. My head's on a swivel here. I considered not doing the show this morning. I actually even dreamed about not doing the show. You know what I dreamed? And this is like, you get crazy dreams sometimes, especially when you have kids. But I dreamt that we were both like trading and we both forgot to do the show. It was like at 8:45 and I was like, we forgot to do the show. Then I came in and looked at all the positions I got. I was like, maybe I should forget to do the show today because I have got positions on. It's big winner day and big loser day for Denny. So overall, hopefully I can scratch or something, but I got some big winners and I got some big losers here. Luckily, I don't have Tesla or GE on because those were, if you're on the wrong side of those would be day breakers. But wow. Talk about news here. I don't even know where you want to start. Where do you want to go? Let's talk.
Well, let's be like a real show here and let our producer lead the way here. Yeah,
lead the way, Mr. Israel, because there's so much to talk about.
All right, let's start with Tesla. It was the settlement that was, and then wasn't, and then now is again. So Elon Musk must resign as the chairman of Tesla. He can remain as CEO though. And he will pay a $20 million fine. So it looks like Tesla is in the clear, question mark?
That is the smallest slap on the wrist I've ever seen. When I read that headline, I was like, wow, that stock is going to fly on Monday because that is just a slap on the wrist. It's nothing. $20 million fine. He can stay as CEO. So he can't be chairman for what, 3 years? They didn't even ban him for life here.
Like 3 years.
There's nothing.
But
also, I can't believe he turned down that settlement off the hot. What is he thinking turning that down?
Wait, but
did he turn that down, or did the SEC come down and actually did he negotiate and get less?
I mean,
that's crazy. Why would you ever turn that down?
But there's also more to this. So he after that because that was Saturday's news, right? Last night they post a blog on the or Elon posts a blog on the company's site, or an email saying that they're very close to profitability. And then this morning, I'm seeing a headline from the New York Post that the SEC has told Elon Musk to stop tweeting Tesla news without the approval of a company and lawyer.
Did he tweet that this morning?
No,
that we're very close to profitability.
It was an email. It was
an email.
email
So
to
he's doing it in
employees.
different means.
Yeah.
He can't stop talking positively about his stuff.
Here,
So
I'll read the email.
You can't muzzle the guy. He's gonna say something again. He's still the wild card because you don't know what he's gonna say. And obviously, he probably learned nothing from this. Here he learned, and he settles. So here it is. What is his stake? He's probably made up $1 billion today on the stock, and he's getting a $20 million fine.
Yeah. All right, here, I'll read the email real quick.
Read the email. I gotta know what this
it was sent, I guess, last night. We are very close to achieving profitability and proving the naysayers wrong. But to be certain, we must execute really well tomorrow. Parentheses, Sunday.
We must do what?
We must execute really well tomorrow, Sunday.
Why on Sunday? Why did he execute?
Well, I guess maybe it was sent out Saturday. It was sent out over the weekend sometime. Okay. If we go all Sunday, I guess. If we go
well, maybe he means like we could get profitable like the quarter that just went by. If we can really execute well on the last day, we're going to be profitable.
Yeah. So I guess that's
what he means.
That's what he means. Yes.
So they're going to show profitable quarter.
If we go all out tomorrow, we will achieve an epic victory beyond all expectations. Go Tesla! 3 exclamation marks. Thanks for all your hard work.
This headline risk in this stock and cannot be controlled. And we said it on Friday. You know, we talked about the headline risk, and I was saying why I don't even like having it overnight right now because you never know what's going to come next. We talked about, you know, if the possibilities, everybody's banking is going to be another bad thing that he does or a bad headline. We also said the possibility, what if he settles? We said that on Friday's show. Here it is. He settles, and look, the shorts are eating it again. I mean, Joel, what do you say about this?
I don't know what to say. I mean,
Just all the technical. How do you trade this technical?
You can't. You don't. I don't.
It's too much headline risk.
314.96. They were returning to the scene of the crime. That was your high a couple days ago. That was your high on Thursday. 314.96. It's also your monthly high. Your pre-market high comes in right there as well. So 315.45. So make a believer out of me. Close above 315. If you were playing any kind of lotto and buying this thing, hopefully we don't have any people that were selling it in the hole. You know, just make sure it doesn't lose 310, 305, 300, 295, 290, because, you know, a lot of people, and also, what about all the people that got caught on that on Friday, and they're looking at 310, 315. They never thought about this in their wildest dreams. So it's still.
The bears were on Friday, the Twitter bears on Tesla were so just out of the hibernation. And not that they were ever in hibernation, but they were celebrating like this is the biggest victory ever. I mean, we had Gordon Johnson on there too. I mean, you can stick with the thesis, but I'm still going to say when this company actually does become profitable, and if they could ever muzzle Elon Musk, the bear thesis starts to fall apart. So that's, why I had it once in that investment portfolio. I couldn't stomach it.
You're buying it back.
I'm not buying it. I just can't stomach the stock. And it was like less than 1% of my portfolio, and I couldn't stomach it because it's just wild. There's headline risk. We don't know what's going to happen. So I'm just out on Tesla. But I'll tell you, man, I don't want to be short the thing either. So the bears can keep preaching everything they want about, this company is burning cash like crazy, but eventually they may sustain some profitability. And if they're not burning cash like crazy, the stock, has really held up quite well considering all this stuff that's went on. I mean, I'd be scared to be short.
Yep, keeping an eye on 315. And wow, that might be the biggest news of the day. But we got another whopper here. General Electric trading near $13. Spencer, give us the news on that.
Yeah, about I guess 13 months after he was installed as CEO, John Flannery is out at the helm at General Electric. They've installed Lawrence Culp as his replacement. So new CEO they're also paying a $23 billion non-cash charge for their power business, and they withdrew their previously issued guidance because they're just not going to make it.
They had to do this. I mean, they had no choice. This just went in the gutter ever since Flannery really got in there. I mean, they had to do this, and it's getting a huge spike because of it. I will just say, do we know who the replacement's going to be? Have they said anyone a replacement?
Yes, Lawrence Culp, who was named to the board, I believe, back in March or April.
What's his story?
Yeah, does he have a plan?
Yeah, because this company, I don't care what the chart stock's doing today. There's still a lot of problems here at GE, and all of a sudden it's up 15% on hope. This is the hope trade for GE. I still think it's hopeless. So I would be, in my personal opinion, I'm a fader of hope here in GE. I think when we look at this 6 months from now, it's back down, but maybe they can turn around. But they had a huge charge too. What was the charge they just said?
Yeah, $23 billion.
What was that for?
Their power business is not doing well.
They can't do anything right. So, maybe somebody comes in and turns this thing around. We thought that was going to be Flannery. That didn't work. I don't know. Whoever, this guy who's undertaking this, maybe, he can turn it around. But I think you're still in the hope trade if you're long GE. I don't like being in the hope trade. So, big level, $13. Let's see what it does there.
Huge.
What's the pre-market high?
Just over there, 13.16, and then that
Call it $13.
Oh my God, $13. And Spencer, pull up the daily here because we talk about our technical analysis and stuff, and we're definitely not fancy at all. Just look at resistance. I mean, you had a quad top right at 13 at the end of August. If you think you're out of the woods after you clear that, you have another quintuplet top at 13 and a quarter. You're playing any kind of short-term options, or you've been buying this thing. We just lose Dennis there? What was that? Oh, okay. You've been playing any kind of, this stock since the beginning of August here. You're flat. I mean, make a believer out of me. Close above 13 on like 750 million shares, and, you got to rally here. But, boy, a lot of stock is traded at
coming
13.
into resistance here. Yeah, you get rid of the CEO. So, but what are they going to do? I mean, the stock's been in the gutter. Look at this chart. I mean, they needed to do this. So, right move. Let's try something. Try something else. They needed to do something drastic. They're doing that. The cutting the dividends and stuff obviously never worked. And so they're doing something drastic here, which was needed. But is this get it out of the gutter long term? That is still the hope trade. So that's the hope. What are you doing, Spencer? Israel, you own this stock in your investment portfolio. You sticking with it?
I'm hoping that it goes higher so I can maybe do something about it.
Give my money back. That's called loss aversion. We all have that. So give me my money back. I'll never touch that stock again. Yeah, I do that too. Even though I've been trading 19 years, I still do that sometimes. But anyways, I gave up giving my money back because I had been averaged in around $30. So I gave up getting my money back and cut the loss last year. We know that it's a 17 and change, and then the rest of it at 15, I think, and change. But wow, man, nice pop here for GE. So overnight, congratulations. I think if we got this overnight, I'd ring the register.
The last two times the stocks got a big pop. One time was when they decided to do that. What was it? The dividend. They didn't do the dividend, but they did the big buyback, and that popped the stock up over $30. That was short lived, and then not too long after they, Flannery came in. I remember that got a pop up to 28, 29. Never seen that. You've had two green candles in this stock since January of 2017, and one was in February, 11-cent gain, and I guess you've had a 1 penny gain. I guess there's been more than 1 month in the green, but $13. I mean, simple technical analysis be founded on this one.
Well, Connor says he just shorted some. I don't know. I'm sitting here. I'm going to let the dust settle to see what happens. I lean towards the short side on it, like I've obviously been talking bearish here on it. But I was leaning towards the short side on BlackBerry too, and sometimes these things can really blow you out before. I like the momentum on my side. What you taught me, Joel, way back in the day, is it's easier to short a stock once it starts going down than to short it when it's going straight up. So I almost want to wait to see kind of how it responds. I don't think it's, maybe it just comes right in here, and sometimes you miss those trades. But I just, you're selling right into the strength here right now. Sometimes it's better to let's see how hard it can go. I mean, BlackBerry on Friday, both of us dogged out at 10.50, and it went straight up in our face to 12. We didn't trade it, but we were talking bearish on it. And so, it's always learning here from it. It's easier when they start going down. When the dust settles, I do believe GE will be lower, but can I take the pain in between? I'm not sure. So that's why I like it when they start to look like they're going to, turn around and start going down. And this is not really looking that, heavy here, at least not yet.
All right. Taking a back seat to all this is the marijuana stocks, and Mr. Samir is in Toronto right now, and there's pot stuff everywhere. 60-minute delivery and anywhere in the city. It's not. I don't know if that's true or not, but just a quick update. These pot stocks are on the rise. I'll just give you your pre-market highs if you're looking for follow through. Canopy growth is up $1.26. A couple highs at 50 to 51 to contend with, 51.04, 51.21. Tilray is getting up off the mat too. That's trading up $12.50. Let's see what the daily chart has to say at Tilray. Trying to fill a gap here. You got a gap up to 158, so I'll keep an eye on that. And Tilray, NBEV, I don't know if there's any specific news on that. That's trading up 90 cents after a couple days of consolidation, and that's filling a gap as well. $6 is my number here in NBEV. We are trading above it, so as long as it holds above 6, some room on the upside.
We had the shakeout in NBEV. We had the shakeout until now there's getting back on the train again. So now it's a little hard. It's $6 here. Your out is way down at 4. So the time to buy these things is usually has the washout day and then kind of tries to come down and retest. And the first day after, obviously, we've got craziness. We got over 10 in the pre-market. Came down to 361 that next day. Then it rallied all the way up to over $5, came back down to the low 4s. That's where you strike because that's where you control the risk a little better. Now it's like 626. Now you're in the middle of nowhere because really, the bulls kind of are back in control as long as it's above 4. And really it's error to like $9 or $10. So I kind of feel like it's hard to initiate it here. So back in the lower 4s would have been a good initiation. But let's go look here. I'm just getting trades as we go, so you got to bear with me here as I continue to get trades. I'm going to sell stuff, but
I just want to make one quick comment on this, Dennis. And I wasn't here later in the day on Friday, but if you take a notice here, he kind of got rid of all the sellers on Thursday. The volume really came off from over 100 million down to 11 million on Thursday. And then you traded almost 50 million on Friday on an up day of $1.25. So, volume confirmation there on an up day. If I would have saw that later in the day, I think I would have been more inclined to, I do have a very small long in this from an initial position, just kind of like the hip pocket trade that you end up doing better on than you do a majority of your position. But nice move here, maybe for this NBEV. What did we do? We got up to $10. We fell to $4, $7. I mean, that would really be impressive.
There you go.
Let's get back over 7 and hold 7.
Yeah, I could get on board with that number there. Tilray, same thing. I mean, went 300, broke down through 100. We called that one, me and you. That was the one we did get right at 97. It bottomed right at that old low. Back up here, 157. Now you're in the middle of nowhere here again. So I can't see, I think the easy money's been made in it. Like, you're not going to see this thing explode to 300 again because some people are caught. But, can it go to 200? Yeah, probably. Could go anywhere. So, and here I think it's just a coin flip. So now, can the bottom fall out and fall back to $120? Absolutely. Can it go to 200? Absolutely. So I think it's a coin flip trade here for me. I don't know any trades for coin flips, so I'm out on Tilray.
Tesla is you think you see 300 today in this trading 307?
Yeah, you could. I mean, this is wild too. Who knows where this goes? And what's the headline going to be tomorrow? I mean, okay, yeah, if they do say profitable, it could really pop on that too. But I think you got a little bit of that banked in here as well. That it sounds like, people are thinking, oh, he is going to be profitable next quarter. But then you also got, is he in the clear here now, or can we get still criminal charges here against him? He's clear with the SEC. Is he clear all around on this stuff now, Spencer?
That's a great question. No? Oh, you know what? Well, Gordon mentioned on Friday that he seemed to imply that there was multiple SEC cases against them, but I don't know. I didn't know what he was talking about when he said that.
And then what's he going to say next? I mean, he's still a wild card there. So he's already, he can't tweet it out, so he'll send out a letter. We're going to make the naysayers believe. I mean, the guy's biggest issue is his mouth. And that's going to be, they can't muzzle him. They haven't been able to muzzle him. This $20 million fine is not going to muzzle him. So that's the issue, is what's he going to say next? If he would just not say anything, I think you could see the bulls really take control of the stock. But like me and you were saying, Joel, if he would have never tweeted that thing out, where do you think the stock is right now? You know, they just had the nice numbers.
Yeah,
He was talking profitability. The thing was up at 340 that day. People forget. I mean, you could be significantly higher than this price right now if he would have never done that tweet about the financing in the 420.
Right. Yeah, I think it was 320, went to 340 that day, and then it got all crazy at 380, and then you had the aftermath where it came back down.
Yeah.
So,
Most expensive tweet in history.
yeah, that.
Yeah.
Yeah. Well, you know what? Now it's not. So, I mean, the slap on the wrist that he got.
$20 million.
I'm shocked that this is low. $20 million. He just, he lost $1 billion by not settling. He's like, oh, I better take that $20 million fine so I get my $1 billion of market cap back in my stock. Anyway, crazy. So let's talk. There's ratings galore here today. I want to go to a few of the big ones. Semiconductors and chips getting downgraded all over the place. But let's go to the other chip stock, Joel. I took your joke here. The other chip stock, the taco chips. Chipotle
Downgraded this
totally
morning.
stole your joke.
You did not have the smoothest delivery.
I didn't do it right. You were smooth on the pre-market show because it went like this. I was talking all the chips, and then I talked Chipotle. And what'd you say, Joel?
Oh, tortilla chips.
Tortilla chips. They're downgrading all the chips today. They're downgrading the chips that go in your computers, and the chips that go in your mouth. Chipotle downgrade to underperform or underweight at Oppenheimer. Price target $400. Stock's down 10 points in the pre-market. Technical thoughts here, Joel. This has been breaking down here for a while.
Yeah.
So this kicks it. It kicks it when it's down.
Lost that 500 number. Got up there. They came right back to it. You do have a little bit of support here. Right now, someone is looking at this 445 level. Initial pre-market low, 444.30, and then another low at 445. Very, very light volume here. On your daily charts, 439.43 is a level. So with the way this thing moves around, maybe hold out for 440, maybe not today, but that was a low. And then just under 430 is your major support, 425.88 and 429.01. So big $400 stock moves around. Use your half and whole numbers right now. Looks like 430 and 440, 430 coming back on the upside. You need to get all the way up to 450, 367 to fill the gap. So sure, a lot of people would like to see this green on the session.
All right, so the other chips, we got AMD downgraded at Baird. We got Applied Materials downgraded at Deutsche Bank. We got Intel downgrade to underweight at Barclays, put a 38 PT on it. That's not good for my portfolio. We got LRCX getting the double downgrade at Deutsche Bank and Mizuho. And we've got Western Digital downgrade at Mizuho as well. Just a lot of downgrades here in all the chip stocks. What do you think here? Like, go to your Western Digital. You sold this, right?
76. Yep.
You thinking about rebuying it?
I don't know.
You're scalping 20 points.
Yeah,
Almost
but I mean, it's not the same, the same thesis. When I got it back down there, I had like a huge dividend, and I don't know.
Yeah. But you bought it originally at like 40, didn't you?
Yeah. And I just
would you rebuy it if it got to 40?
Yes, I would.
You think we got a shot to get that low on some? I mean, they're out of favor.
Yeah.
Funny things happen.
53.60. I mean, if you want to, for a swing trade, if you think they're going to get a big retracement here, 53.61 is the low of the move here. And I think, but this is like the first downgrade, right? And I haven't pulled up my pro yet here, but don't they start to hop on the bandwagon here? Like one guy did
all the analysts do that. I get 4 in a row.
Yeah. So this could
sometimes.
A series of downgrades here. I'm not interested.
Also, did you mention Intel?
Yeah, Intel downgrade underweight at Barclays.
Okay.
What, 38 PT?
Sure.
So it got the upgrade Friday, right?
Let me check.
Yeah.
Wasn't it? It was up on Friday for some reason. I can't remember.
No.
Goldfish memory.
I don't think so.
Something happened on Friday. Or Thursday night. Maybe it's Thursday night. I'm pretty sure. I remember some type of upgrade. All right, Goldfish memory here, anyway. But I even own the stock and I can't remember. But regardless, it had a big pop on Friday. So I guess the Barclays looked at this and said, "This is our chance to downgrade it. We'll sell the pop." So they were a fader, and it's getting knocked right back down here. So you can't keep a bad dog up.
I got a lot of interest in this under $46. Your last 4 lows of the week. Let's just call it The middle low was 45.73, 45.75, quad bottom there. If it did come into that area of support, I think they're a little bit more of a swing trade, a little closer to the low of the move, which was 44.06. And did you mention AMD in that? That got, man,
downgraded.
What a tough stock to hold on to, man. I had a lot of 32 puts in that thing, and it just kept on running up and making me cover, and I did. And then it was Nvidia news, right, that they were like spending another $1 trillion on capex or something. Was that the news on Friday?
I don't know.
And knocked it down.
I have the goldfish memory.
Got under $30. You talk about your round numbers, $29.98. That was low on Friday. Big number. That was my original target, was 30. I think you would have had to be cat quick though to get it at under $30. So let it digest. I'd be more interested. High of the move was 34.14. You just went down to 30. If this could get back up near 32, I think I'd be looking at my chops on the short side.
Jump over here. So many stocks in the ratings land here. Let's just go look over. There's a whole bunch of initiations at Cantor in the biotech. So that's a huge note there. It came out Friday night. But I don't know where. There's so much news here. Where do you want to go? SFIX reports tonight. Spinner's saying.
Let's do that.
I did not realize that one. Was that on my calendar? I don't know why that wasn't on my calendar. Anyways, maybe because
let's do that one, because someone asked me in the chat.
I would have probably been long that thing if I would have known it reports, because I know I love to buy them before they report. So anyways, if you were long it over the weekend, being rewarded here this morning, I don't know if there's news or anything this morning, but it's up 3.5%. It's probably just run up because it reports. I mean, these things, seems to be easy money buying those stocks before they report.
If they've been up trades here, try to do something. Someone in the chat here, and I'm not doing the air math because I just want to get it completely correct here. That 45.5 area, that looks like the 50% retracement of that break. You're right in that area now. Real bad day from when it went from 47.11 to 41.65. The high in that day was 44.60. So I figure your exact 50% retracement today, I think that should be the key, whether the stock can run back up and make a new all-time high. Your pre-market high stands at 45.92, and buy_Apple said that it got the Kramer pump on Friday on Mad Money.
So what SFIX was?
Yeah, that's what he said.
Kramer moves stocks. We know that. So always got to be aware of what's on Kramer and what he's going to talk about. And if he talks about something out of the blue, it moves it even more. We didn't talk about the fireworks too from end of the quarter. There was a few stocks that did some crazy gaps at the close. Check out MPC. So Marathon Petroleum. So here it was just happily trading. If you look at the chart, you can see it was happily trading around $81. And then boom, gaps down on the close to 79.97. Well, it's getting all that back this morning, right back up here at 81.56. So if you had an order out there for the closing print, you were rewarded with a point. Endeavor went the other way. ANDV, if you check this one out, gapped up over $1.50 on the closing print, or right near the end of the day there. And I believe Endeavor, though, that was it, right? I think that is that stock done? Because that was taken over, wasn't it?
I believe so, yes.
Yeah, so you often see some craziness when the stocks are going off the board. So that was right at the end. So I believe we're done with Endeavor here now. That was the Marathon Petroleum purchase. So that's probably why you saw the crazy action, because that's Arbs doing their thing. So Marathon was Marathon buying Endeavor, right? Yeah. They're merging together. And that was the end on Friday. So they're now one company under Marathon Petroleum. But you saw Marathon gap way down, Endeavor gap way up on the close. And that was because the merger was closing.
And just your expectations when these stocks, whether it's like a quad witch or end of the quarter, and you get a big move on big volume. Dennis is looking to take the other side of that trade. Just
fading them.
Yep. And a lot of times they rebound. Not only they don't wait before the day, the following trading day. Sometimes you get that immediate gratification as they they rebound in the after hours markets right after those big volume events.
Yeah, sometimes you just got to be careful though when you're trading and make sure it's not going off the board and make sure you're not getting on the wrong side of the arb because the arbs are in there trading these things too. So and those guys know what they're doing. So if there's an arbitrage and there's a ratio involved, they'll buy the one and sell the other. It's probably what you saw happen on Friday as the arbs are trying to come in to basically make the last little bit of money that's in there.
Okay, let's real quick imbalances here at 8:31, Dennis.
Go check it out.
A lot
See
of
what's
buying
happening.
balances here. I tell you that that
GE buy and balance. Look
How
at this.
much?
GE's got a buy and balance. It never has a buy and balance. We knew it would today. 215,000 shares to buy. It's going to grow a lot. It's going to probably be in the millions to buy by the time the thing opens, but it's already pricing that in. I mean, the thing is still struggling to get over 13 though. So
interesting level.
I keep that bogey. It's not about 1290. You almost get me interested here, to play. Well, let's see what it does at 9:30. If it can open and starts to leak right away, I might use the open as a bogey. And this is, how, I do my day trades a lot of times. Something you taught me too, Joel. You taught me a lot of good stuff back in the day. Stock opens, starts going down, comes back through that, or let's just say hypothetically GE opens. Opens at 13, goes up to 1305, 1310, 1315, comes back down through the 13. What does Joel do?
Go with the book, short it to the
when it starts coming back down through the open, that's where you strike.
And then you have an out too. Let's say that opening high and that was. I mean, that I don't think
that's setting up a day trade for you right there. That's how that's how you taught me, and that's how I trade them a lot of times. So let's see what happens. Maybe it opens. Maybe it goes up a little bit, shake a few more people in, and then starts to come down. Now you got momentum on your side. Now you have it defined out because you have a high for the day to lean on, and you can go from there. Like right now, you're just hoping that 13 holds, but hope is, obviously I said I'm fading hope here in G from the investor standpoint, but I don't want to be in the hope trade myself where this thing opens and then just keeps rallying. You get a blackberry on your hands and then it's out of hand. I mean, that's why just flat out, showing these things in the pre-market saying it's going to give it back. Sometimes, it takes a long time to start giving it back. And BlackBerry did go all the way up to $12, end up being down 11.40. And I still think BlackBerry leaks, but I mean, there's a lot of pain in there to hold through that. So the better trade is to get it on your side, let the stock open, maybe it rallies a little bit and then comes back down through the open. That's where I like to strike.
And the opening price in BlackBerry, let's say you went with the momentum of the higher open. I got a 1043 open and a 1043 low. So if you would, you're inclined to buy the open there, you gave yourself a small stop. But let's just put on our hedge fund or institutional manager hat here. And someone comes and says, let's buy GE today. We've stayed out of it. Let's take our big position now. I mean, holy moly, are you going to do that with the stock trading up 14%? This is the change in transition. If anything, this is going to take a quarter, 2 quarters, 3 quarters, a year and a half, 2 years. How long is it going to take this guy to implement these policies?
Yeah.
And then for them to actually show up on the, on the bottom line? I mean, maybe he will. Maybe this guy has some great ideas or whatever, but
he better.
Yeah, he better. Okay. All right.
All right. Well, it's 8:34. I'm going to take us to a quick break, and we're going to grab our guest for the day, David Miller. He's Michigan manager, so I'm sure you'll get along. Senior portfolio manager and CIO at Catalyst Funds. We'll be right back in a moment with David.
We'll
And welcome back, everyone. Spencer Israel, Joel Elconin, Dennis Dick, now joined by David Miller, as I mentioned, from Catalyst Funds. David, how's it going this morning?
Things are good. Thank you.
Okay, so I guess we got to ask you about Tesla to start off with. What was your reaction to that news over the weekend?
Yeah, so the whole Tesla situation has been pretty crazy to say the least. His tweeting definitely got out of control, and clearly the SEC had to react to that. They had no choice when he's saying he's basically out to get the short sellers, and then puts out a tweet saying he's going to take the company private at $420 a share with no signed agreement whatsoever. So clearly he was trying to call their bluff when he didn't agree to the settlement at the last minute. And after the SEC made it clear that they were going to kick him out of his own company and ban him from public companies for the rest of his life, he probably realized it was a good idea to take the deal, and we'll probably see a good rebound in Tesla today after that.
David, I see you identified undervalued stocks with a near-term catalyst for appreciation. How do you define undervalued?
So the way that I'm trying to define undervalued is a good bit different than the way that most people are, in the sense that I don't think I necessarily know more about each company than the top executives who are running the firm. Whereas what we've found is if you look at the top executives, the C-suite officers in particular, and the board of directors, what we've found is that when they're buying their stock in a very big way, it tends to indicate that that firm is likely to appreciate in the near future. So what we're looking to are the insider signals in terms of the Form 4 filings. If they're buying their stock on the open market with their own money above and beyond their stock option plan, we believe that's a good indication that stock's undervalued, and vice versa. If they start flipping directions and selling their stock in a big way, that tends to indicate that it's overvalued.
Okay, so you don't drill down with any Met PEs and, book value and things like that, in the more traditional sense of value investing?
So I certainly look to those factors, but what we've found over time is that if you look at some of the other signals, in particular the EPS growth, earnings beats, the insider buying, that those tend to actually have a bigger influence on the stock price in the near term than some of the metrics like price to book and free cash flow yield and PE, although I certainly look to those as well.
Do you look at the past history of how these insiders buys and sells for because if a guy buys something at 50 and then, use that as a signal and then it goes to 40, do you look at the past history of their insider buys and sells?
Absolutely. So I use a ranking system where I rank every company from a 10 to a 1 based on the past history of those executives. So if they've done a great job timing the stock in the past, that company is going to get a much better ranking than a firm that the top executives have timed it poorly. We look at how highly ranked those executives are. So a CEO, CFO, chairman, that's going to be more important than the board of directors activity. We look at the size of the purchases and incorporate all of that to give a holistic rank.
All right. So again, let's get right down to it here to see what's on your radar. I thought General Motors, our good old Detroit company here, was undervalued at $37, $38. Getting a nice bump here, probably off the trade agreements with Canada. GM, Ford, Fiat Chrysler's had a better year. Are you finding value according to your metrics here in the big two, GM and Ford?
So if you look straight to the insider metrics, you definitely will see that there has been some insider buying by top executives at the firm, in particular at General Motors. Jane Mandillo, one of the directors, as well as Patricia Russo and Thomas Show have all been buying the stock. But there's only one of those actually happens to have occurred most recently, and that was back on August 18th. And there's definitely been more insider selling than buying at G. So it's kind of a mixed indicator at that firm. Whereas if you look at Ford, there's been some more significant recent insider buying. John Lechleiter, one of the directors at the firm, has done a couple purchases in a series of transactions thus far this year. And towards the middle of last year, William Clay Ford Jr. was buying a bit as well. So it's a little bit stronger indicator on Ford than it is on General Motors.
How about in the food sector? I thought I found some value in Kraft Heinz at 60, now trading at 55. Food stocks have been out of favor. I think people are still eating here. Any undervalued stocks in the food sector?
So at least if you look at the food sector generally, we haven't found very significant insider buying of late. Kraft Heinz did have insider buying by Mackie McDonald going back to April of 2018, and 3G Capital Partners was selling out of their stake in August. So it's been mixed there. The place where we've actually found the insider activity to be more compelling lately has been in some more growth-oriented stocks rather than some of the traditional value names where you'd usually think of there being insider buying.
And what is your time horizon for these? Are you looking for a pop, a long-term trade? What's your time horizon?
So there's two elements to that. So the first component of the time horizon is looking to the insider buying activity, and where we're placing most of our focus is what's been going on in the most recent quarter. If they were buying a year ago, it's certainly not as significant as if they've been buying over the past month. So that's where we're focusing our purchase and sale decisions, although our holding period, typically we try to hold for at least a year so we can get the long-term capital gains treatment because it can make a pretty big difference from a tax angle.
All right, so David, you're looking at these companies and you're looking at the leadership, and you wake up this morning and you see not just the Elon Musk news, but you see GE making another leadership change. Kind of walk us through how you, like, when you see a headline like that, like how you think about it, and what does that do for you?
Sure. So what I'm trying to do for the most part is stay away from the headlines where it's hard to evaluate the precise impact of what that'll have on the share price going forward. So GE might be a good example of that. Clearly, they're looking to get rid of their CEO now. And while that CEO had some insider buying, that CEO had a pretty terrible track record of insider buying. So generally, you'd think that would be a net positive. And I think you'll see some positive impact to General Electric today. But where I've looked to see where you look to the news event relative to the way the stock tends to perform thereafter, in particular, is how does insider buying correlate to the earnings beats and earnings misses of the company? If you look to some companies like a Home Depot or a Heiko or Adobe Systems or PayPal or Blackline, where they've been blowing out their earnings reports and beating expectations, and you combine that activity with insider buying, that's when you usually get the best signals, because there's been a lot of studies that show this PEAD phenomenon, or post-earnings announcement drift, where the companies that tend to beat earnings tend to outperform in the future as well.
David, what about insider selling? Do you track that too? Because sometimes you see these execs after a big run up in the stock start to really sell stock. Do you look there?
Absolutely. So I certainly do look at the insider selling, but it's not nearly as powerful of a signal as the insider buying. And a great example of that would be a company you think of that's just a good, healthy company like an Apple or a Google. A firm of that nature, if they've appreciated massively over the past decade, clearly most executives aren't going to be looking to buy more stock at that point in time. And the natural inclination is to sell and cash in some of their chips. So what we're really looking at isn't generally the companies that have done well and then the insiders are selling, because that's a much less meaningful signal. But what we're looking at in particular is when the stock has done terribly and the stock's lost a lot of value and the executives are selling heavily into that, because that tends to be a very strong indicator that things will continue to go poorly at the firm. Or from the same perspective, if they were buying and then they flip directions and start selling, that's also a very important indicator of the lack of confidence in the firm by those top executives.
What about the size of the insider buying? Are you really focused on like how big? Because I'm sure some execs just want to give a vote of confidence, and maybe they're just coming in saying, okay, the stock's been going straight down, we're going to give it a vote of confidence, I'm going to buy some stock. Do you look like, okay, well, that wasn't really significant, or, this guy really is significant and he's loading up? What are your thoughts there?
It makes a huge difference, because sometimes, to your point, you'll see these situations where they just missed earnings things don't look like they're going very well, and several executives will buy a little bit of stock in something that looks fairly coordinated from the C-suite. Whereas you have these situations where you'll have a couple big executives buying into an earnings beat, especially if it's like an 8-figure transaction. Nobody's doing that just for the optics when they're digging deep into their own pocket. So the size of the transaction is critical.
All right, David, we're coming off here our best quarter for the S&P 500 in 5 years. Last question, and we'll let you go. But kind of how are you? Tell us how you're approaching this quarter and kind of through the rest of the year.
So my approach to this quarter going forward is really driven by where we are in the economic cycle. And if you look at what the yield curve is telling you right now, we haven't seen in the past decade where the 2-year and 10-year Treasury have been nearly this close, less than 30 basis points of difference, which has historically meant that we're going to have a very strong economy in the near future. You combine that with 3.6% expected GDP growth for Q4 and a jobless rate sub 4%, alongside a $1.5 trillion tax cut that we've had this year. And that is a pretty bullish and strong indicator for the stock market going forward, which tilts us more towards thinking that while we may be in the later part of this bull market, we don't anticipate that it's going to end within the next year, and we think this year will finish strong.
All right, David Miller has been on with us. He is the CIO and Senior Portfolio Manager at Catalyst Funds, Catalyst Capital Advisors. David, thanks for coming on today. And
wait, can I ask him?
Yes,
one very important question?
Yeah,
Spencer?
Here we go.
Were you as nervous as I was on Saturday night when Michigan was down 17-0?
Yes, I was. I was born in Ann Arbor and U of M alum, so I was feeling it.
All right. Well, let's see here. We're taking on Spencer's Terps this weekend, so should be a lot of fun. We're going to go up there and have a few pops.
I didn't realize you were from Ann Arbor, or maybe I did actually. I just forgot. But you're Joel's new favorite person, I think.
All right, David. Thanks a lot.
Okay, thanks for having me on.
All right, Joel, where are we at now?
The Spoos are leaking here. We're still up 13 3/4 handles at 29.3275. Your pre-market high is 37.75. Last week's high was 36. So all of a sudden, you get back the losses from last week. Boom, you touch last week's high. I'd love to see it back up there again here. Let's see if you're looking to fade or you're looking to take some profits here and some longs. GE have proven us wrong as we speak right now, over $13, $13.06, $13.05.
So it stops going up.
Yeah, it's going up here. So I
set up the trade. My trade setup is open. Let's see what happens. It starts going up a little bit, comes back down through the open. That's where I'm interested. So that way you don't get burned on something that's just going to go into rocket ship mode and continue.
All right. And
there's some people who are short this thing that are puking right now too.
Right.
So, not everybody is always, I know the short interest isn't high in GE. What is the short interest in GE, by the way?
I was just thinking that. Are you reading my mind again?
Dude, I know. I have the Joel mind reading algorithm written right here, and it just popped up and said, what is the short interest in GE? It's only 1%. It's really short. It's really small.
I don't.
People can't believe this can keep going down. But anyways, regardless, there's short-term traders that are short this thing. I've been shorted every other day. If I just I can't believe I'm actually not shorted. So I would have been thrown up if I was short this thing. But we've been talking about this, and the only reason I wasn't shorted is because it was like starting to form like a little bit 1122, 1125. I'm like, it's thick down there in the lower 11s. So I was like, just not as much being on the bone until I could take out 11. But we know I've been playing it from the short side from 13 down here. I'm lucky I wasn't shorted because I've been short this thing probably overnight, probably over half the days.
Right.
So I actually, when I saw the headline this morning, I was like, gee, I hope I'm not short GE because I couldn't remember if I shorted it Friday night or not. But I kind of remember that it was like down here near support. It closed near support, and I was like, eh. And you know what else? It was like end of the quarter. Sometimes you get the washout selling at the end of the day, and GE was selling heavy into the end of the quarter as well. So I typically don't fade that. I typically do fade it, which means I would have bought it. But anyways, I typically don't go with that.
Did you go like delta neutral on Friday? Because you said you had some big winners and some big low. Were you kind of? I know you like to use the spiders a lot and stuff.
I'm always market neutral. I
Okay.
trade market neutral. If you want to talk about my trade, well, on my day trading, I'm almost always market neutral. Because that way I don't get any slammed in my face when we get a trade deal between Canada and the US over the weekend and we're up 15 handles. So I typically trade market neutral, beta neutral sometimes. Like I know if I'm long AMD, you can't just short, a little bit of, Qs against it or whatever. And AMD is its own animal. But overall, I try to trade market neutral. What I am trying to extract, and this is, how I've traded all the years, is little market pricing inefficiencies. Maybe a stock is pushed too far. Maybe there's, a rating that I think it should be higher on this rating. Maybe it's shorter, because, I talk about the ratings all the time. And, stock might just be slightly down on something. Maybe I think it should be down more. There's little statistical edges that I'm trying to extract. And if I just put those on, and then the market rips in my face, but all my statistical edges were short overnight, I'm going to lose money. So typically, if I have too many shorts on, it's nice when you can just go stock versus stock. But sometimes I just like a lot of my stat plays are shorts. So I need to hedge myself. And if it's tech stocks, I'm going to hedge myself with the Qs. If it's, overall, S&P components, bigger components, I'm going to hedge myself with the SPY. Those are if it's biotechs, I'm going to hedge myself with IBB or XBI. So I typically am always hedging myself. And some people say, well, why do you do that? You're going against your own trades here, but I'm not trying to extract out market moves. I'm not trying to call the market. I'm trying to extract out the little inefficiencies. And what those hedges does is it smooths my earnings curve. Somebody's argued to me before, well, you could just not hedge at all. And, you'd still extract that in the long run, and you would. But you would have a wild earnings swings. Like today, if I was net short overall, I would be losing a lot of money because the market is up. And instead, because I've got hedges on, and and in this case, the hedges are working against me because I actually had some net longs in some of the biotechs from Friday night, and I had a short SPY against it. If I wouldn't have had any hedges, I would have been up a lot of money. But that isn't, extracting alpha. That's just getting the market right and getting a good call in the market. Sometimes I'll call the market. Sometimes I got to feel. And sometimes I'll stay a little bit longer, maybe not hedge all the way. If I really feel like, my 2-day move we talk about a lot, if I see something. So I sometimes will make market calls. But more often than not, I'm trading market neutral.
And before you were at Bright, you were in school, right?
Yeah. I learned everything from Bright Trading. So, and Joel taught me a lot too. I was a young buck and I traded in the universe. So, we want to just talk a little bit more. So I started trading when I was in my second year of university with my parents' money. And I just was nibbling and I was trading tech stocks and I was trading everything. This is 1997. So 1996. And back then, you just bought a stock and everything was going up. So I thought I was a hero. I thought I could do no wrong. I can remember trading the penny stocks too, and everything was just hot. We were in a raging bull market, tech bubble. Everything was hot. And then I got to Bright and I realized I had no idea what I was doing. I was simply just benefiting in 1997, 1999. I made money in those years. And the only reason I was making money is because the market was going up. And I wasn't really extracting anything. I was just benefiting from a strong market. And I think a lot of traders here in the last 5 years have benefited a lot from a strong market too. The time, where you really tell if you're, can trade and you're in good markets is when you start going into these bear markets. Can you survive the 2001s? Can you survive the 2007s? Can you survive even 2011 when we had the European, crisis? These happen. We haven't seen it in the last 7 years really, but they happen. So you've got to be able to, survive the downturns too. And not only that, Joel, what you taught me is stocks go down a lot quicker than they go up. So what I found after I started at Bright was I not only survived in the down markets, I thrived in the down markets. And because we were always extracting inefficiencies, everything gets inefficient when everybody's just selling everything because they have to. So the inefficiencies explode in bear markets. And 2007, 2008, 2009, like my best trading years, I've been 19 years at Bright. And if you look at, my best trading years, my best trading year was 2001 because the tech bubble burst. And then 2007 happened and 2008, 2009, and those years exploded. Those years were like in 2008, I made way more money than any other year. And that was simply because there was inefficiencies all over the place. We were talking, you were making money, preferred stocks, remember, Joel?
Oh,
I was buying preferred, selling the commons against them. Because if they went bankrupt, we were pricing stuff like some of these banks might go under. I was playing Lehman preferreds and different things, but I'm like, okay, in the event that this goes under, I've got the preferred, which is going to be ahead of the common, and I can buy the preferred at a bigger discount than the common is right now. I can remember buying like HSBC preferreds, which were trading for like 20 cents on the dollar, and selling the common against it. And you know what? I lost like 80 or 90%, on my common because we came back. But on those hedges, and I held these for a while, but on those preferred stocks, those went up 300, 400, 500%. Like there was that one I bought like HSBC, I don't know, it was like PR. These are traded preferreds, and it was yielding 42%. That was the yield, 42%. You know what? They kept paying that, and everybody's banking it's going to go under. I'm like, okay, if it goes under, well, I'm short the common against it, and I shouldn't lose money. But if it doesn't go under and they keep paying this preferred dividend, I'm going to make a lot of money. So there's a lot of different ways, and these are different edges you're extracting. We don't see that today. There isn't edges like that today because we're not in a financial crisis.
Just gonna say that.
Yeah. So, and you were you were playing Morgan preferreds, weren't you, Joel?
Yeah, but those were long-term things.
But these were long-term too. So I had short-term trades that I was putting on. That one day, I don't remember what day it was. It was like October of like 2008, I think. It was like every preferred stock. So these preferreds, and I was really trading preferreds a lot back then because they were wild. This was the credit. It's because of credit on the banks, and we lost Lehman Brothers. We lost Bear Stearns basically. So these things were wild trading, and I would trade the preferreds against each other. So there was Citigroup, there was like 10 of them. So I can remember the one day, like some of the Citigroups, there was just a washout day, and they were all like 12, 13 bucks. This one day, there was just so much selling pressure. Everybody thought every bank was going under. Some of these Citigroup preferreds opened at 5. Other ones were at 10. I'm like, holy cow. So, you're buying the ones at 5, selling short the ones at 10. And you're basically, and you got to look a little bit, it's not just as easy as it, because they're not all identical, but some of them are pretty dang close. The credit, make sure it's not, it's a preferred, it's not a traded bond because that credit rating is going to be higher. But I mean, I was bringing in those ARBs, like that money at open was huge. And I can remember like it came in like 10 minutes. It was just like they were all back to where they were supposed to be. So there's inefficiencies that happen, but the most inefficiencies happen in those markets. So in those markets, I'm making 10, 20% sometimes in a day. It was absolutely insane, on those inefficiencies. The inefficiencies I try to extract now are fractions of a percent. I will enter a stock, like GE, if I feel like I have a 0.1% edge. So, and because, I'm not on commission structure really, because you're at Bright. So you're basically on profit share for the most part. So, I mean, you can jump in these things. If I make a penny, I'm making money. So at a retail brokerage, you can't do it as well because you got ticket charges, you got different things. Now at IB, you can go and you can trade by the share too. So there's different ways to do it. But I mean, the inefficiency trade, what I'm trying to extract now is way less than I was trying to extract back in 2007, 2008, 2009. But that's why I like volatile markets, because those inefficiencies are the same. They're just not as big. So in stable markets. So right now I'll jump into something for, a fraction of a percent. And, yes, you're picking up nickels in front of a bulldozer, but we're pretty good at getting out of the way of the bulldozer.
Yeah, and also you had the concentration of liquidity, right, on the New York Stock Exchange. So basically all the stock or the preferreds were going to one venue. So you had the concentration, and the specialist or the designated market makers were looking for some help on, on the other side of the orders.
They're advertised to you. I was like that open, and we're looking, and some of these preferreds that closed at 12 are indicated to open at 5. I'm like, for real? Here you got 2 preferreds that are almost identical. One's indicated open at 10, one's indicated open at 5. This isn't rocket science. This is pure arbitrage. I will buy the one that's open at 5 and short the one that's open at 10 and extract 5 points. And it worked. That was 2007, 2008. You don't see that. That doesn't happen here anymore. Unless, it did happen a little bit in the Knight debacle. I remember in 2012 when Knight, and that was just, an algorithm that had gone haywire too. Algos go haywire, inefficiencies are created as well. But I mean, there was so many inefficiencies back in 2007, 2008, 2009. So it's just a different style of trading. Most retail traders are trading, making calls. They're coming in and they're saying, I think the stock is going to this, and I think the stock is going to there. And we're all making calls to a certain extent. But I'm making calls that I think the stock is going to trade here relative to this stock. So it's stat arb, pair trading, whatever you want to call it. But I'm just saying that the spread is going to come in. And maybe there's a reason behind that. I'm trading dozens of different stat arb strategies, but that's what you're going with. It's just a different style of trading. So my style of trading, I feel like, is very consistent. I've said for a long time, I typically make money 4 out of 5 days. If I look at my track record, this summer, I had 2 months where I didn't have a losing day. I think it was July and August. I never have a losing day. So a run of 40 days in a row and lose money. So we're doing very consistent stuff. But, I'm not making big money either where I'm coming in here and making a call and watching my stock go up 50% overnight. That's why, stuff like Tilray and stuff where people are trying to get rich fast. Yeah, and they can. And those people are maybe making some money really quickly sometimes. But you know what? They're losing quickly sometimes too. I don't have those big down days where I come in and my Tilray stock is down 50% and I'm throwing up. So it's a different style of trading. I can't stomach. Maybe, I would make more money if I actually just was making calls and jumping in stocks like Tilray and NBEV. But I'll tell you, from my experience, those stocks are harder to trade. Making calls on those is harder to do. And that's why I kind of stick with the more boring stuff. And it makes me more consistent. So I guess it's what you're trying to do. You're trying to get rich fast, or you're trying to make a living. I'm trying to make a living. That's why I kind of just stick with what, these little statistical edges that I'm trying to extract all the time.
Just real quick, Dennis, did you just see anything on Bank America here?
We'll find out.
Oh, no, I don't know. It said, those are just odd lots.
No, that's a fin. Yeah, so there's crosses at the old close. It's FINRA 29. Still 29.
Okay.
You gotta watch if you're seeing trades trade on, and this is just tape reading. You're seeing FINRA trade reporting facility go buy on the exchange. Sometimes you got some old crosses at the close. Sometimes you got some late reports. Maybe you got something going on. But typically you gotta look. FINRA will during the day. FINRA, but pre-market after hours, these some FINRA trades. It's often just at the close. It's just like people who are crossing the close. They don't have enough disclosure. We've said this all along. I've talked. I've even had meetings with the SEC about this type of stuff. There's not enough disclosure in what is in what's where the off exchange trades are, what's going on. I just see FINRA. I know it's an off exchange trade, and we can't really determine anything more from that. We need more information really for the public market on what's happening in the dark, what's happening off exchange, where orders are going. The FINRA, you see that, and sometimes it throws off the last, but for the most part, you're seeing it after hours and pre-market. It's usually like an after hours cross or something, or it's just a late report to the tape from the closing print. A lot of trades are report on the closing print. So just because you see something all of a sudden trading up, after hours, and all of a sudden it's back down to the close, make sure it wasn't on FINRA, because a lot of times those are just old trades that were just being reported at the tape that were at the closing print. It's not where the market is currently.
All right. Tesla is slipping here. Boy, oh boy. It's I don't know. Don't see anything new on it, but starting to get back some of those gains. The last thing, pre-market high 37.75. Last week's high 36 even. So there's your big level on the upside. Hard to give you a great support level. I would just give you 31.75. That's 29.31.75. That's been your low since you made your pre-market high. So, all right, Spencer, we really kept you.
That's okay. Great discussion.
Oh, man.
It's
now
okay.
we have to pay him overtime.
Don't mind going a few minutes over for a good discussion, but that is our show for the day. So thank you to our guest, David Miller. Thanks to all of you who joined us in our chat rooms on YouTube and premarket.benzinga.com. Want to remind you all that everything we say on our show is for informational purposes only and not meant to be investing advice. Last thing, the Benzinga FinTech Summit is coming up November 14th in San Francisco. If you are going to be in the area and want to meet some of the biggest names in the brokerage space, people from TD Ameritrade, Schwab, E-Trade, people from Ripple, the co-founder of Venmo will be there. Go to bzsummit.com. The first 10 people to enter the promo code PMP at checkout will get half off their ticket. That's bzsummit.com. And on that note, that's it for our show today. So thank you guys for tuning in, and we'll see you on Tuesday.